What's up, everybody? It's Brandon here, and today we're talking about what the Feds just talked about, which was rates. So, what are we going to see here moving forward with everything? So, Jerome Powell, as you guys know, spoke today, and he had a pretty okay press conference. I would say it's non-eventful, and I was on a call earlier as well. One of the things they were talking about is like how much impact Jerome Powell has when he speaks. So he was very careful to answer and a lot of people ask the questions of like, well, when do you think interest rates will drop, or when do you think interest rate will go up? And at what point do you think interest rates would go up? So, curious to know what you guys thought as well. If you watched it, definitely let us know in the chat. But yeah, so let's jump into it. This is really what it pertains to, especially in the housing market. So one of the things that he said was inflation was still high, and yes, inflation is still high. And the other thing that they talked about was really when you take out the energy and food costs, they're trying to taper that. But in reality, that's what people use every single day, right? This is what people need to live on: energy prices and food, because that's what we consume. That's the consumable. So when you take that out, it doesn't really give you a true idea of where inflation is going to be. So one of the things I think is going to happen is I actually believe inflation is not where it is. I think it's actually probably 8% higher, because when you add back in energy and food prices, and that's where really most people feel the pressure, and they feel the burn, and just like in their finances. So this is one of the things that we have to think about. Inflation is still high, and the Feds are targeting what's called a 2% goal, right? So they're targeting for inflation to get to 2%. Do I think it's going to get to 2% this year? I'm not 100% sure. However, I don't think it's going to get there. I don't see how it will get there. It could just somewhat taper off depending on what this administration does. But I don't genuinely believe inflation will get to 2%, because it's also a demand issue. And I've said this before. When you look at where things are and how many things we have, inflation is going to continue to go up. But is it really inflation, or is it the value of these goods are going up, or sort of these corporations that are just asking for more money? And in my opinion, I think that home prices are continuing to go up because we don't have that many homes on the market. We don't have that much inventory. So of course, when you have a high demand and low inventory, you will have sort of that effect, and things will continue to go up, which could show like inflation is going up, right? Inflation is rampant, but that may not necessarily be 100% of the thing. The other thing too that Fed talked about is, obviously they're going to keep interest rates the same. I expect them to keep the interest rates through the end of the year. However, Jerome Powell is a Fed chair, and he has been under a lot of pressure in the recent years in terms of changing his mind. So if you guys know him, like before, he would essentially like make these promises, make these changes, and say, "Hey, we're gonna do XYZ," and then they do the complete opposite. And he got a lot of flack for that. So that, I believe, has changed, and now everything that he says, he actually does it. And one of the things that Jerome Powell said last year was that they were going to drop interest rates 3 times, and I don't see them dropping interest rates 3 times this year. However, I see him dropping it at least once, in order to kind of save face and pretty much seem like he is doing what he said he was going to do, which is drop interest rate. So it's that perception. So dropping interest rate 1 time, that's what I see. The other thing is I only see them dropping it by a quarter point. I don't see him much more than that. I don't know, but however, if I had to guess, if Joe Biden and his goonies like had something on Jerome Powell and they pressure him into dropping rates, I think it could be before election, just to make the economy seem better so that Joe Biden could get reelected. If not, though, I think realistically the best chance would be probably into, probably November, December timeframe to drop interest rate into next year, which should ramp us up and help our economy recover a little bit. Because right now unemployment is about 3.8%, so it's pretty low. That's also going to have an effect on things if unemployment goes up. That's going to obviously change things. They're targeting a 5.25% to 5.5% Fed rate right now, and they're going to keep it there as long as it takes, right? according to what he says. Again, like I would take that with a grain of salt because he's very reactive in the markets. The markets love to react to him. So keep that in mind. Um, the other thing too is like they're unlikely to raise rates at the next meeting. So, June I think is the next meeting. I don't think they will raise rates at that point. Like I said, I think it's pretty much going to be the same thing for the most of the year, unless something drastic happens here. One of the questions I would have asked was like, hey, if things stayed the same, when would you drop interest rates? And there was someone that kind of asked that question, but he didn't really answer it. Again, did not want a market reaction. So as far as the housing market goes, I still believe that we're going to see steady growth and be in the seller's market. We're going to see those home prices continue to creep up 8 to 12% this year. In some areas, I think it might be as much as 18 to 24%. It just depends on how high demand of an area you live in and what that market is doing. So in my opinion, I think now is the time to buy, and then that way you could lock in at a price that you want. Home prices are going to continue to go up, and when interest rates drop, we're going to see these buyers come back to the market. So remember, going back to last year when Jerome Powell said they were going to drop interest rates about 3 times this year, the market overreacted, and I think that's what also caused a little bit of overspending on everyone's part, and it caused a little bubble in the housing market. It sort of like pushed the housing market a lot faster, and that's why our spring market came so quickly. So I think just because of that, I would kind of get ready to buy now, and we're already seeing the competition out there. So get ready to buy now, and then refinance later. And I know you guys think like everyone's been saying that it's cliche at this point, but here's the thing: home prices are going to continue to go up. So if you want to lock in at a price you want here, and then that way later on, you end up here and then refinance, you may be even able to get your PMI dropped off, your private mortgage insurance. So it's a great way to do it. That's my outlook. I'll see you guys on the next video, and we'll talk soon. Take care.